Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research Incorporated, a registered broker-dealer, member FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Financial planning services through Andover Advisory Group, a registered investment advisor. Cambridge and Andover Advisory Group are not affiliated. Cambridge does not offer tax or legal advice.
Good morning, Justin. I want to thank you for your hard work. The information is a big help, and I appreciate what you did. Enjoy the show.
All right. Thank you.
Okay, that's great to know. Thank you for the information.
You're very welcome.
Okay, Jeff.
Okay.
Thank you very much.
You're very welcome.
You're right on the money. That's how you're doing this morning. Thank you.
Well, those are good questions. Hopefully that helps.
Yes, thank you so much.
You're very welcome. You're going to hear stuff here that you don't hear anywhere else on radio.
And you don't forget it.
Welcome to another edition of Talk Money. For those of you who might be visiting for the very first time, let me introduce myself. My name is Jeffrey Shank. I'm a chartered financial consultant, owner of Andover Advisory Group, a registered investment advisor. And this show is all about education. Because when you have good information, chances are you're going to be able to make some good financial decisions and improve your financial situation. And so ultimately, our goal here is to raise your money IQ. Good morning, Lou. How are you?
Very well. How are you?
I'm very well, thank you. I was thinking as an educator. I don't think that
financial educator.
As a financial educator, I don't think I should be required to come in here. I think I should be able to do this remotely until such times as I'm vaccinated and everybody else here is vaccinated.
How good is the Financial Educator Union?
It's kind of funny watching the administration straddle the line between following
contributions,
following the science, and following the votes.
Yeah. Or between contributions and making sense. It's a fine line.
Contributions and making fine line.
Yeah.
I joke this morning.
I don't.
I think that personally, I think that if you don't feel comfortable, given what's taken place over the last year or so, if you don't feel comfortable going into your place of employment without some sort of protection, that you should be allowed to work remotely if you have to work remotely. And I think that your employer is obligated to do the things to make the workplace safe.
As a Massachusetts taxpayer whose kids are weeks from being out of the school system permanently, I think this is a good thing, because I think what we can do is we can get rid of brick and mortar schools. We can rearrange the whole system here.
I think
save some money.
I think it is a great opportunity to reassess how the education system in general, and or whether or not we're taking full advantage of technology and how we teach our kids. Absolutely. Now, I'm not saying that learning remotely works for all situations, all students, but I think to a large degree, we have not been taking full advantage of the technology that exists that would make it much more effective, much more efficient, and maybe less costly.
And all kidding aside, on a higher education scale, this should really reshape the higher education landscape.
You would think so, but there's a lot of vested interest in the system as it stands today.
I know.
There's going to be a lot of resistance to the kind of change that probably should take place.
Yeah.
And that's all I'll say on that matter.
No, I agree. But consumers of higher education should be thinking about making better decisions.
And insisting that the consumer should be insisting that these kinds of changes.
Well, I don't think they have to, because I think certain schools are going to take advantage of this, and the market is going to produce these options. But people will be reluctant to take them, but I think they should.
But isn't that the problem with education, that there isn't a lot of free market thinking that goes into it?
Yeah.
Unfortunately.
Yep.
But anyway, so again, I did say that's the last I'm going to say about that subject. I don't want to cause too much controversy.
Okay.
So today, the IRS is officially accepting electronic filing of your tax returns.
Yay.
The 2020 income tax filing season has officially begun, and we're learning a lot of stuff as we do this. And I just had some I think some important items that you should be aware of as you file your tax return as a result of the pandemic relief bills that were enacted last year.
Mm-hmm.
There might be some things that you're not aware of, and I wanted to make sure that you knew this before you actually filed your tax return. And of course, if you've already filed it and you find out that maybe there was something that you didn't take advantage of, you can always file an amended return.
Right.
But typically that has to be done on paper, and the IRS is still working on last year's paper
Amended returns? Yeah.
Not amended returns, but just paper returns in general.
Really?
Oh, yeah. Yeah, they're way behind.
They haven't done last year's paper returns. Just returns. Nothing special about them.
Just returns, not just amended returns. Yeah, they're way behind on their paperwork.
Wow.
Way behind. Well, it depends on when you filed it. Suppose if you filed it in February on paper, that you probably did get some sort of response, but they're still filing. There's a backlog. Let's put it that way. Yeah. There's a backlog. So let's start with, and I think there's a slide to put up there, Lou, if you haven't already done so. Let's start with the recovery rebate tax credit. We're getting all kinds of inquiries about this. And I think the funniest thing, well, probably the most important thing that you need to know, and it is kind of humorous, is that this form that they're looking for, and I forget what the number is, 1444, I think is the number of the form, that tells you how much of a rebate credit you were issued. That form that everybody's asking for, your tax preparer is asking for, and the system, when you do file your income tax return online, if you're preparing yourself, and it asks you if you got this form, everybody's saying no, that they didn't get the form, and there's a reason why that everybody's saying no.
The form doesn't exist.
No, the form does exist, but when it came in the mail, it was designed as propaganda, because it came with the White House masthead on it, and it said, the Trump administration is sending you money.
Oh, I see.
Basically. But that was a form.
Yep.
And I keep asking Connie, I said, so everybody's telling me they didn't get the form. And she said, I'm going to tell you for the third time. She says, that's the form that everybody got. Oh, yeah, that's right, too.
Yeah.
That's the form that everybody got that said, hey, we're sending you a check for X amount of dollars. That is the form. It was actually two-sided.
Yeah.
And the official language, I guess, if you want to call it that, was on the reverse, but it was signed. Remember, it was signed by Donald Trump.
Okay, himself. just for the exercise of rhetoric here.
Yes.
Say we threw that form out.
Yes.
What do we do?
You don't need it. It was just a notification, and there's a tool online that you can use to verify what they sent you. Mm-hmm. Now, that doesn't necessarily mean you get it, because a lot of people get the
whole direct deposit deal.
Well, the direct deposit would be easy to verify. Just look in your accounts. We actually had a couple of clients who missed that direct deposit, believe it or not. Yeah. But some individuals received their advance rebate, advance credit in the form of a debit card.
Oh, yeah.
Remember that?
Yep.
Yeah, and so a lot of people, you get those offers, those credit card offers, and you look at it and you say, and you just shred it. Some people threw it in the trash can. So what you want to do is, first of all, verify.
Surprising that a government program ran into so many, hitches.
Surprisingly,
it's surprising.
Shocking. So let's understand what this is. So they wanted to get money into the system. They used various means to do that. One of those was to use the income tax system as a way to get money into people's pockets.
Right.
And so they created a tax credit that was based on the eligibility was you had to have had income, including just Social Security income, you had to have had income that was less than $75,000 up to $199,000 as an individual, and twice that for a couple. You were eligible if you filed an income tax return over the last couple of years, 2018 or 2019, and depending on, because the first one came at the beginning of the tax filing season, which they extended to July, and the if they didn't have the 2019 return to look at to figure out whether or not you were eligible to receive it, they would look at the 2018 tax return instead, and they would send you this money. So it was an advance payment of a tax credit that you would reconcile on your 2020 tax return.
Right.
You can imagine that some people won't be eligible when they actually figure out their 2020 tax return. But here's the thing. If you already got it, they're not asking for it back. The only people that they're asking to return it are people that weren't alive, basically, when when they sent it out.
Wait a second. That's undue discrimination against the dead.
Against the dead, yes.
Because we don't hold them to these standards in other places in the government.
Because people who had recently deceased were getting these checks, these advanced rebate checks.
Yeah.
And there was a question as to whether or not they should be spent or sent back. But in the end, it was best to return that. But if you didn't qualify on your 2020 tax return because you were above the income thresholds, they're not asking you to send it back. But if you didn't get the credit at all, or you got less because your 2018 or 2019 tax return showed a higher income than what you would actually be eligible for, that you actually had in your 2020 tax return, you can claim that as a credit on when you file your income tax return.
Same for people who throw out their debit cards.
Same for people who throw out the debit cards, although they didn't replace it. I know they didn't replace them. They're gonna say that you got it. I'm not sure exactly how that's going to work if you claim it, but that's how you do it. You claim it on this year's tax return. Bottom line is $1,200. If you got less than $1,200 in that first round, $500 for each qualifying child, then you would claim the additional rebate. If you've already received all the money, or you get a check that there was even excess of, you don't have to do anything. You just leave all that information blank, but you do have to check off for filing the using software. It's going to ask you if you received it, and you should check it off to make sure that you're not claiming it correct. Because you could accidentally, if you accidentally don't check that box that says you get it, the software is going to assume you didn't, and it's going to create an additional rebate. And that's going to be a problem for you, because the IRS is going to say
that they'll want back.
That's it. They're just going to send you a notice that says, sorry, you claimed too much of a credit, and you owe us some more money. And then there was the second bill that was actually enacted in January, I think, of this year. But the actual credit, the advance that they sent you, which was $600 per eligible family member.
Right.
That one, everything works the same way. If you got it, you do nothing. If you got, the parameters were the same. That is to say, eligibility was the same. Income thresholds were the same. And if you didn't get the full $600 for some reason, you can claim it on the 2020 tax return. So even though they enacted it in January of this year, it actually
it's a 2020 event.
It's a 2020 tax event.
Yeah.
Got all that?
Yep. Yeah, I do actually. Surprisingly enough.
I guess that covers it. I got to tell you, you can't believe the
yes, I can.
The issues that this is causing, and now because of the new one, the potential new tax rebate for 2021, people are rushing to get their income tax return in because they want to make sure that they don't miss out on the next round of stimulus payments.
Is that a thing? Does that challenge their next round of stimulus payments?
I would imagine they're going to do the same thing. They're going to look back to the prior year, But again, if that prior year was,
They had higher income and would be eligible for less.
it would be eligible for less or
Yeah.
ineligible, you'd probably want to get that tax return done sooner rather than later. Yes.
I hate to hit you with a blindside question, but
Let's try.
several people in 2020, many people received unemployment benefits that had additional payments on top of them,
Yes.
the $600 per week.
Yes.
I'm under the impression, probably erroneously, that the additional payment was not taxable. The unemployment payment was taxable.
Wrong.
No, that you
So who
say
said
they
that?
tax the additional
told you that?
600. Oh, I don't know. It's just stuff you hear. It's
No.
static in the wind.
No, unemployment benefits are taxable.
Even the additional.
Even the additional federal.
Mhm.
As far as I know, it's taxable.
Yeah.
I haven't seen anything to the contrary. I will verify that for you, Lou, but my understanding is that
That's probably true.
No, my understanding is that it's going to be taxable.
Yeah.
Unless they change something. I know the administration is making some changes to PPP.
No, there's
as
just
we-
news
as-
flow coming
as
down
we
the
speak.
river, and I thought I caught that somewhere, but probably not.
No, as far as I know, no, that's not the
Okay.
case. All right, so let's see. Based on 2019, taxpayers who did not receive full payments claim the credit. Let's make sure that we get this all covered. Might be eligible for additional funds. Okay, we already covered all that, right?
Yep.
Okay, cool. All right, so let's talk about coronavirus-related distributions. We're talking about retirement plans.
Yes.
And so, as part of the relief bill, there was a provision that allowed people who have retirement accounts, IRAs, and employer-sponsored plans
Mhm.
to withdraw funds up to $100,000 in 2020. Remember this?
Yep.
I almost forgot about this.
Yeah.
It was exempt from the 10% early withdrawal penalty, people 59 and a half,
Mhm.
right?
Or below.
Or below.
Yep.
Less than 59 and a half. I'm
Yep.
sorry. Less than 59 and a half. A lot of people don't know this, but the penalty for early withdrawal from a simple IRA, that's an employer-sponsored plan that gives you higher contribution limits, but doesn't require all the administration of a full-blown 401k plan. The early distribution penalty, same age 59 and a half, is 25% instead of 10%.
Oh, wow. Ouch.
Yeah, I'm getting that.
Ouch.
Ouch.
Yeah.
Yes. But you could withdraw $100,000
Mhm.
and avoid the penalty if you were below 59 and a half. And here's the best part. You could spread the income from your qualified coronavirus related distribution. You could spread the taxes out over 3 years. So you would, if you took out, I'm going to go 99,000.
Yeah.
You would claim 33,000 this year, 2020, 33,000 for 2021, even though you got it all in 2020.
Yep.
You could claim it all in 2020 if you wanted to.
Yeah.
I don't know why you would, but you can spread it out. So 33,000 goes on 2020, 33,000 goes on 2021, and 33,000 goes on the 2022 tax return, potentially keeping you in a lower tax bracket, but at the very least postponing having to pay that tax.
Right.
Because, you know, Lou, from working on with me for so long, $1 paid today is worth more
That's right.
than $1 paid tomorrow.
That's right.
So you're going to postpone paying the taxes. Why wouldn't you do that? The only reason you wouldn't is because you think you might be in a higher tax bracket in the future. And here's the best part. You can put it all back. And if you put it all back over a 3-year period, in other words, this year,
Yep.
you put 33,000 back in, 33,000 next year, 33,000 the year after that, you don't have to pay any taxes at all.
It's nice of them.
I think that's pretty cool. Now, why am I saying all this? It's
Yeah.
too late to pull money out for 2020
Right.
and take advantage of this, right? What if and here's the thing, your employer, if you have a 401k plan, your employer would have had to have amended their plan in order to make this available. It wasn't just you could take it out.
Oh, I see.
They actually had to say, yes, you can do this. And yes, we put the language in. And guess what? You'd have to have somebody working in your company's HR department making these kind of changes, number one.
Yep.
And typically there's a cost associated with this. So what the IRS is saying is, hey, if you took other money out for some reason that wasn't necessarily officially a coronavirus related distribution, like you made a hardship withdrawal somehow,
Right.
some way, you can consider it a coronavirus related distribution, CRD, and take full advantage of the payback features and the ability to stretch it out over a 3-year period.
Recognizing they had no way to police this anyway.
Potentially, I guess. Yeah, I guess maybe that's it. Yeah. So that's why I'm bringing it up, because it's too late to take advantage of this unless they make it part of the new relief bill.
But it's not too late to include distributions that weren't
that were otherwise considered coronavirus, that were not considered coronavirus related distributions because your plan just didn't allow for it. So you took other money out because you needed it.
Mm-hmm.
You can essentially say that was a coronavirus related.
Oh, so this will work whether the company changed the wording of the
plan or not.
Yeah, okay.
That's exactly right.
See.
So let's say you took out some money as a loan.
Yeah.
And you don't pay it back. I'm not sure exactly how that's going to work. That's going to get a little dicey. But let's say you just did a hardship withdrawal.
Yep.
You are allowed to, and you don't have to put it back into the same plan, by the way.
Oh, interesting.
As long as it goes back into a plan.
Mm-hmm.
And so if it was an IRA distribution, you can put it back into your company's plan. If it was a company distribution, a company plan distribution, you can put it into an IRA. It doesn't have to be, again, it doesn't have to go into the same account.
Considered a rollover.
It's essentially going to be considered a rollover. That's exactly right.
Yep.
Yeah. That's kind of important.
Yeah.
Because if you took some money out and
it's a management opportunity,
and you put it on the tax return, and it says, first of all, you weren't 59.5 penalty.
Yep.
Or you're putting the full amount on there instead of a third, it can make a big difference in your overall income taxes.
Yeah.
Make a big difference.
Especially if you were looking at a penalty. Yeah.
So listen, don't rush to don't rush to file your income tax return before you make sure that you're taking full advantage of all of the changes that were made available to you as part of the pandemic relief. Hey, you know what? Look, we're going to talk about deductions next, but I probably should take a short break here. And when we come back, we're going to get into some of the other changes that maybe you didn't hear about. Everybody heard about the rebate, the stimulus payment, and that's what it was focused on. But there's some things that you probably aren't aware of that I think are important that could save you some money this year on your income taxes, and maybe even an opportunity to amend a couple of years tax returns because of some changes that were made. So,
I always like that.
Yeah. So stay tuned. We'll be right back.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. You'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Welcome back to Talk Money. The 2020 tax filing season has officially begun, and there's a lot of things that I think you should know before you actually file that tax return, because there might be some opportunities that you could miss out on if you're not aware of it. And so we've just been going over a few of those, many more than what we have a chance to get to today. So we'll be talking about that on future shows. So please join us here every Monday
Yes.
at 9:04 a.m. or thereabouts,
Thereabouts.
depending on how things go.
We're pretty good. We hit the 904.
I think we did.
Yep.
Yeah, we got talking about tennis. I don't know why we started talking about tennis, Lou.
Because you're a big tennis guy. That's why. Want to talk?
I set the.
Want to talk NASCAR?
Yeah, probably not.
No. Yeah.
Oh, I enjoy it. I don't think I can sit there and watch a whole race. I don't think I'll ever attend a live race. Maybe I'll put that on a bucket list.
Oh,
maybe I'll put that on the
the
bucket list.
Daytona 500
Yeah,
is a
probably.
bucket list event.
Yeah, probably should.
Everyone should go to a Daytona 500 once.
Yeah. I'm more of an actual driver kind of guy.
Yeah.
Have my own little Daytona 500 on a daily basis.
But what you missed was this weekend was the two analyst guys, Jeff Gordon and
Yes.
Clint Boyer.
Yes.
They
They get at it.
They rented two cars and went on the road course,
Oh, is that right?
and they actually were slamming each other and spinning each other around
Oh,
in suits.
oh.
By the way,
Oh,
it was a pretty amusing
I
piece.
definitely missed it.
Yeah.
I definitely missed it.
Yeah.
So, some of the things that you should know, some changes that were made. So these are buried in the legislation that we didn't hear about. We all were focused on this rebate that we were getting, this stimulus payment that we were getting, but there's a lot of things that were buried in this legislation that you may not be aware of. And so, could you bring up the slide? So deductions. So this would be for people who itemize their tax deductions, and now they increased the standard deduction, doubled it in 2018, and so a lot of people are taking full advantage of the standard deduction instead of itemized deductions.
Right.
But if you do itemize, and a lot of people still do, there is a new floor for deducting the medical expenses. So they had changed that to 10%. What that means is you apply 10% to your adjusted gross income. Let's say your adjusted gross income is $100,000.
Yep.
You take 10% of that, $10,000, and before you can deduct $1 of medical expenses, the total has to exceed $10,000.
Oh, I see. Yeah. All right.
And by the way, those medical expenses that you can deduct include your health insurance premiums, assuming that they're not a pre-tax deduction through your employer.
Right.
So if you ever get the tax deduction, you don't get to claim it twice.
So it was a deduction of the medical deductible, essentially.
Exactly.
Yeah.
Right.
Yeah.
And so all of your expenses, like your deductibles, co-pays, even your over-the-counter drugs, can be added to that total. If you are on Medicare and you have a Medicare Advantage plan, you're paying additional premiums, that can be added, and those can be expensive.
Yeah.
You can also include your long-term care health insurance premiums if you have long-term care policy. And so the floor was raised from 7.5% of your adjusted gross income to 10%. Well, as part of the pandemic relief, they permanently lowered it to 7.5% of AGI.
Permanently.
Well, as permanent as
in air quotes. These little air bunnies there.
As permanent as
government policy can
be, I
right,
guess.
yeah.
Yes, just until the next change in the change of control in the in Congress, right?
Yep.
Another, and this is something that I think I don't think a lot of people are aware of this, but they changed some of the education tax benefits, and it favored a tax credit. But those tax credits, both the lifetime learning credit and the American Opportunity Credit, which, by the way, is more is higher, is a larger credit than the lifetime learning credit. But the American Opportunity Credit is available for the first 4 years of your college education.
Right.
So they have income thresholds on those credits, so that if you make over a certain amount of money, you don't get to take advantage of it. And a credit, by the way, is a deduction, because a credit is a dollar for dollar reduction in your income taxes, whereas a deduction just reduces your taxable income. So you only get a partial benefit for a deduction. And so they had this tuition and fees deduction for those people who didn't qualify for the credit. But that got phased out with that that legislation back in 2018. It was gone. It disappeared. Well, they brought it back.
Yep.
It expired in 2017. They reinstated it for 2018, 2019, and 2020, and 21 and beyond. So they're bringing it back.
Hmm.
I'm sorry. 18. No, I apologize. 18, 19, and 20. They brought it back. And it goes away again for this year, 2021.
Right.
So what does that mean? Well, if you were a person who couldn't take advantage of the tax credit and couldn't take the
Because of
tuition
your
and
income.
fees deduction because you exceeded the threshold,
Mhm.
and you couldn't take advantage of the tuition and fees deduction because it wasn't available to you, guess what?
It's available now.
You can go back.
Oh, and you can do it retroactively.
Yes.
Oh,
Yes. And if you were to ask me if you do that on this year's income tax return and say, hey, I didn't take advantage of that, I don't know the answer. I believe you'd have to amend your return in order to take advantage of it.
some opportunity.
Yeah.
Yeah.
Yeah. And that could, I mean, it could be substantial.
Tuition and related expenses, yes. It's a lot of money.
Well, you don't get, there is a limit.
Yeah.
There is a limit on that tuition and fees deduction. You said related expenses, it's tuition and fees.
Tuition
It's
and fees.
not room and
Not
board,
room
books and that sort of thing. So this is a tuition deduction as I understand it. But again, an opportunity potentially to go back, take a look at 2018, 2019, see if you had a one of your kids in school and you're in a higher income tax bracket, you may not have been able to take advantage of the credit. So if you did your tax return yourself, you're going to want to go back and take a look and see what happened. If you have a tax preparer, you want to contact your tax preparer as you turn in this year's paperwork and say, hey, about that tuition and fees deduction that's retroactive back to, and your tax preparer might say, what?
Hey, listen, it could be tickets and air to the U.S. Open next year. I mean, people are going to be there.
Next year, this year, you mean?
This year, yeah.
Could be. Fans could be back in the stands. Speaking of the Australian Open,
Yeah.
did you hear?
No.
So they had a limited number of fans.
Oh, did they? Yeah.
They split the grounds into 4 quadrants, and you had to stay within that quadrant. So if the match you wanted to see was being played in the stadium that wasn't in your quadrant, sorry, out of luck. But they did have fans in the stands and on the grounds until Monday or Tuesday of last week.
Oh, what happened?
There was
They had 3 cases in Australia?
Apparently at the airport or something. Yes,
Yeah.
that's exactly what happened. There was some sort of exposure, and the province of Victoria shut it all down. And as of midnight one night, while they're playing matches, they had to evacuate the.
They evacuated?
They took everybody out of the stadium at a certain. That was a curfew. You had to leave.
Okay.
And they actually, I didn't get to see it, but I think they stopped the match while everybody was leaving the stadium.
Wow.
And they came back on Thursday, though.
Oh.
They came back on Thursday of last week. So it was like 4 days or something.
Okay.
Yeah. So it must have happened on the weekend. And it was like four days or so. And they said if nothing, if as long as we don't see an increase, we're gonna lift the ban, lift the lockdown, and they brought people back into the fans, into the stands.
It's not even the incubation period, Jeff. I don't understand policy, but that's another story.
I don't either, but it was interesting watching the coverage because they have done a great job of suppressing the virus in Australia.
Yeah,
a great job in terms of both cases and fatalities. Just incredible. And I was curious, and I did a little bit of research. I haven't really gotten too deep into it, but apparently did not the measures the measures they took didn't necessarily impacted it negatively, but the economy did okay, even though they were very strict in terms of the precautions that they were taking. So they did a great job.
Interesting.
And so I was talking to a client who said, well, Jeff, it's an island.
Yeah.
I said, no, it's not. It's a continent.
It's a continent. Yes. But effectively, his point works. It is a continent.
So much different than South America
Well,
or Africa.
yeah.
A little bit smaller, maybe. I don't know. Anyway.
Yeah.
We'll get off that subject. So, continuing on the deductions and the pandemic relief measures.
Yes.
In terms of deductions. So that was just that was for those people who itemize the medical anyway. And then the tuition and fees deduction is an above the line deduction. I should mention that it's not a Schedule A itemized deduction. So you can take the tuition and fees deduction whether you itemize or not. So you can still take the standard deduction.
Interesting.
And you can still get the tuition and fees deduction. I should have mentioned that.
Yeah.
I just realized that as I'm looking
yeah.
at this. Yeah, very important. What about charitable gifts? Well, that is an itemized deduction. And as you know, everybody's taking most people or a lot of people are taking the standard deduction.
Right.
So all that money that you were giving to charity, although you're keeping track of it, generally is not impacting your income tax because you're taking the standard deduction. So special rule for 2020 and 2021, 2020 and 2021.
Mm-hmm.
There is a new above the line deduction, not a credit, but a deduction for cash contributions you make to a qualified charity.
Cash
contributions. Oh,
as opposed
check,
to
credit card,
Yeah, exactly.
whatever.
Okay, yeah.
As opposed to property.
Okay.
So you give your old clothes to Goodwill. That doesn't qualify
Right.
in this instance. So it's just for those cash contributions that you're making,
Mhm.
and it's limited for 2020 to $300.
Yep.
2021, it's going to go to $600 for a couple. So if you're filing jointly with your spouse, it's still only $300 for 2020.
Right.
So everybody should be taking advantage of that small deduction. But if you're in a 20% tax bracket, that's $60.
Yep.
Might.
There's your hot dog at the U.S. Open. A beer or two.
A beer or two.
Whatever the hell they serve at U.S. Opens.
I think you might be able to get like 3 beers out of that.
Yeah.
I think. Maybe 4.
Mm-hmm.
So, do you know something I don't? Am I going to the U.S. Open this year? Did you talk to Debbie?
I don't know.
About...
We were just on a tennis kick this morning. So
Okay.
I'm just relating. I'm trying to put these opportunities on a
Into
scale that
context
you relate to.
that I can
Yeah.
relate to. I see.
Could be a tickets and air to the U.S. Open, maybe a hotel,
There you go.
meal or two.
So, again, if you are making those charitable contributions, as most people do,
Mm-hmm.
I mean, you go to church, you throw $5 in the tray.
Yep.
Right. Maybe 10. Do that for a few weeks.
GoFundMe's qualify for this, right?
They do not.
They
I'm
do
glad
not.
you asked.
Oh, yeah,
I'm glad you asked.
because a lot of people
assume they do.
a lot of people
They do not.
make contributions to GoFundMe's.
They do not,
Why not?
because they aren't a qualified charity, and the people that it goes to is not a qualified charity. That's why.
Ridiculous.
And in fact,
Yep.
read the fine print on the GoFundMe site.
Mhm.
They make it very clear that
Not
they
a
are not
deductible.
a qualified
Yeah.
charity. I don't know that they go as far as to say it's not deductible, but
Oh, yeah.
they do tell you that they're not a qualified charity, and they are not acting on behalf of a qualified charity, so they're not a conduit. In fact, when you set up a GoFundMe page, that money has to be distributed to the ultimate beneficiary within a certain time period. So if you don't get the money out of the account within the time limit, they actually send it back to all the donors.
Oh.
It gets to be a problem because people say, okay, I set up this GoFundMe page. We got $30,000 in here, and I gotta transfer the money. What do I do? Where do I go? How do I get it out of there?
Yeah.
And they give you some small window of time to I think it's more than a month, but it's less than 6 months.
Yeah.
To do that, but you should be aware that your contribution to a
Good point.
GoFundMe
Yeah.
is not necessarily now, unless that GoFundMe site is set up by a qualified, I don't know why they would,
Yeah.
but if it's set up by a qualified charity, that's would be a different story. And you need to get a receipt for that. Anyway,
Yep.
Make sure you do have receipts. Your cash contributions that you put into the tray on Sunday. Maybe not. You're probably not going to get a receipt for that.
Yep.
Doesn't necessarily mean you didn't make the contribution. If you're ever audited, you probably should have some documentation that backs up your contribution, right?
Yep.
And again, so that's only up to $300. Doesn't matter how much you gave, and it doesn't matter that you're single or filing jointly. You only get the $300 in 2020. And I found that out because I kept putting the number in and saying, "Where's the $600? Where's the $600?" And so it is limited in 2020, but next year goes up to $600 for some reason.
Very nice.
Above the line deduction. I have a feeling that we're probably going to see this more beyond 2021 because a lot of people are incentivized to give, or they give knowing that not for that reason because of the income tax deduction, but they just become conditioned that it's a tax deduction. And now with the standard deduction, it doesn't matter anymore. Yep. So I could see some people saying, "I'm not getting a tax deduction."
Nothing to be ashamed of.
No, but here's
might be a deciding or certainly an influencing factor on your charitable contribution.
Here's a strategy. Here's a strategy. What if you picked a year that you were going to make 10 years worth of contributions, and you did it all in that year, and you exceeded the threshold for itemizing your deductions. In other words, when you added up all your itemized deductions, interest on your mortgage, your income, your property taxes, your income taxes, everything together added up to more than your standard deduction, then you could take advantage of it. And how about a donor advised fund?
What is a donor advised
fund? A donor advised fund is where a institution sets up essentially a place where you can deposit money as a qualified contribution, and the money doesn't actually go to a specific beneficiary until you decide who that is and how much to give.
Oh, so it's kind of escrow for charity. Yeah.
I like that. I like the way you put that.
Yeah.
That's exactly what it is. Yeah.
So I've made a charitable contribution, but it hasn't been distributed to the actual charity yet.
Donor advised fund, they call it.
And you get to choose when and where.
Correct.
Yeah.
But you get the deduction in the year you make the deposit of the funds, even though the ultimate beneficiary hasn't received the money yet.
Interesting.
Yeah. Once it's in there, it's not coming back to you.
Is that do those exist, or is that something you have to set up?
Oh no, those exist.
Those exist. Okay.
Oh yeah. In fact, there are a lot of major fund families that have set up these funds specifically for that purpose.
Yeah.
So that's a way to put a big chunk in, exceed the threshold for
right,
the standard deduction, and get a tax deduction for your charitable urges.
Mm-hmm.
Yeah, I think it's a good idea.
And that's great. So when you feel urged to make a charitable contribution, you can do it knowing that the money's already in there.
Right. Yeah.
And
And
want to send money to Texas and
send money to Texas.
send money to Texas. Yeah.
Yeah. That's a whole different
Oh
story.
yeah.
Yeah. It's fascinating. We don't have time.
Yeah.
We'll talk about that next week because I was watching the coverage of this and listening to the politicians and I just said,
fascinating, isn't it?
Seriously?
Yeah.
This is your takeaway from this event? Really? Anyway, so for those of you out there who like to do your tax return yourself and you'd rather not have a professional do it or pay to have a professional do it, we do have a solution for you, and we feel that it is actually a very good solution for those people who can't file their tax return for free just because maybe they're self-employed or they have some investment income, capital gains. Maybe you got some cryptocurrency that you need to recognize, and so we recommend And there it is right there.
There it is.
We recommend. I actually got a slide for it, Lou.
Oh, do?
Yeah, check it out.
Oh,
Yeah,
all right.
check it out. Look at that, huh?
Oh,
And so a lot of these outfits that are saying, hey, file your taxes for free, that's real basic return. And if you have anything unusual, maybe even itemize your deductions, for example, you have to pay for that. And then you have to pay for the state filing anyway in some cases. So we have this, we recommend this service where it's just $25, $25, and that's the same price for everybody. Doesn't matter how complicated your tax return is.
right.
It's not free, but
Yep.
$25.
$25.
And you can try it for free. And all you have to do is just use that QR code. So you just scan that QR code. It'll bring you right to the site. You can set up an account, get it started for free, start putting in all your information, see if you like it. And when you're ready to file, that's when you pay. That's when you pay, when you're ready to file electronically. Or if you want to print, I think if you try to print out the paper return, you'd have to pay for it then.
Yeah.
But it's $25. Well, and you can,
And don't do the paper return. It's still working on last year.
let's say you're working in New York.
Yep.
You live in Massachusetts, and you have to file state tax returns in multiple states.
Yeah.
This covers as many states as you need to file. Or you have property. Let's say you have property in another state, and you have to recognize the income from that. Again, this covers everything.
And it works within the rules of the individual state.
Works within the rules of the individual state. Yeah, it's fantastic.
Wow.
Yeah, it's great. Yeah, terrific.
Quite
Hey,
a
listen,
resource.
we have one. I've got one more tax related piece of information for you today. I'm going to call it today's talk money tip, but we should take a quick break, and we'll get to that when we get back.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. You'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Welcome back. Hey, I think maybe we might have been discriminating. That last slide, we put up the QR code.
Yep.
Some people can't do that.
Yeah.
Right. So I should just mention, go to the website, AndoverAdvisoryGroup.com. Bottom left corner, there's a link that'll bring you to the same page, and you get the same pricing. Everything's the same.
Yeah.
Same. You don't have to use
I
the
don't know
QR
if that rises to the level of discrimination, but yeah. Listen,
leave anybody out.
you have to be able to work QR codes if you want to eat nowadays. So menus, they aren't giving
right?
out menus, right?
Yeah.
If you don't eat.
I haven't.
You can't work a QR.
I haven't.
Oh, you're from New Hampshire, so.
Well, I haven't been to a
restaurant.
Oh, I have, but mostly just takeout, right? But have not sat down and had a meal in a restaurant. Well, I take it back. In the summer we did, because we were at the beach, so we did a couple times.
QR codes,
what a hassle that was! But no QR codes there.
No,
this is New Hampshire.
Yeah,
this is the beach in New Hampshire.
No,
QR codes. No.
First of all, there's not much of a menu. It's burgers, it's fried chicken. What do you want? You know the menu.
Seafood.
Seafood, right? Exactly.
So we're going to call this today's Talk Money tip. And this is for all those people who were working from home.
Oh, okay.
Okay. There's a lot of you out there that are working from home. So if you're wondering whether or not you can deduct all those working from home related expenses, that new hardware you had to buy, the new modem that you had to buy, the new computer that you had to buy, the camera, the headset, the whole business, and you paid for it. Sorry, not deductible if you are a W-2 employee. That is to say, you're on the payroll, you get a W-2 at the end of the year, you have an employer-employee relationship with your employer. They withhold taxes, they're paying workers' comp, and they're paying part of your Social Security.
Right.
That is, you're a W-2 employee when you see that evidence, right? So
working from home does not make you self-employed.
Does not make you self-employed, and does not make you eligible to deduct those expenses. You used to be able to do that as a W-2 employee, unreimbursed business expenses, but that was prior to the change in legislation. It was an itemized deduction. It was considered miscellaneous. There was a 2% threshold similar to the medical expenses, but that went away as part of the new tax laws. So yet you're out of luck. I'm sorry, unless you're self-employed. Now, you could talk to your employer about maybe reimbursing you, and there are some programs out there that would allow the employer to be able to do that and not have to call it income to you. They could just pay you for those out-of-pocket expenses. But unfortunately, not going to put it on your income tax return for 2020. There's something else. If you normally worked in Massachusetts, let's say, Massachusetts would, so your office was in Massachusetts, you drove to Massachusetts, you're a W-2 employee, your income from that Massachusetts company was subject to Massachusetts income tax.
Right.
Now you're working from home. Let's say you live in New Hampshire.
Yeah.
And you're working from home.
Let's say.
Yeah. Right. And you're saying, wait a second. I'm working in New Hampshire. I'm not working in Massachusetts. I don't want to pay Massachusetts income tax if I'm working in New Hampshire. Now, typically that would work in many situations where some of your work is being done in a state other than the state where the company exists. But the Department of Revenue in the state of Massachusetts, in this case, and I'm sure others, New York, I would imagine is doing the same thing. Has taken the position that this is just a temporary thing. You're actually earning your money in Massachusetts, even though your employer wants you to stay away from the office, and you're working from your home.
Even though the state doesn't want you New Hampshire people coming into the state.
The Department of Revenue of the state of Massachusetts actually issued a technical release at the beginning of last year, the spring of last year, to effectively say that. That we consider the income that you're earning because you were typically working in Massachusetts, and just because of the pandemic, you're working from your home. You're not going to avoid paying income taxes on that. Massachusetts are considering it Massachusetts source income. So that's the way it stands right now. If there was any way to do anything differently, certainly you should explore it. And certainly we'll explore it with our clients. But as of right now, it looks like you're out of luck. You cannot say that some of this income was earned in Massachusetts, some of it was earned in New Hampshire, without getting into a fight with the Department of Revenue in Massachusetts, and they get nasty. They fight nasty. Did I say that? Or did I just think it?
No.
So
you said it out loud.
Did I say it out loud?
Yeah. You're not wrong either.
So you really should. You probably want to be very careful. You'd be taking a risk if you try. Now, on just so you know, the governor of New Hampshire has taken the initiative to try to back up his constituency in New Hampshire.
Is the DOR taking his phone call?
He put together a lawsuit that is being looked at right now by the U.S. Supreme Court. And apparently it's a constitutional issue. And the governor has said, I haven't looked at the lawsuit itself, but the governor is saying that you don't have a right to tax residents of New Hampshire who are working in New Hampshire and not working in Massachusetts.
Yeah. It'll be an interesting case.
So I checked on it this morning just to see if there was any updates, and the latest I could see is that the Supreme Court doesn't really want to answer this question. Apparently,
no, of course they don't.
And they want to get in the middle of that squabble, and so they have actually reached out to forget what it was, but they're trying to determine whether or not they should actually have the ability to make that determination as a Supreme Court.
Well, it's a question of what the criteria is for where you're working. Because there's plenty of precedent for being taxed for where you physically are as opposed to where your check is issued.
Well, yeah. I mean, so it's an unusual circumstance.
Sure.
So the Department of Revenue in Massachusetts is saying, hey, except for the pandemic, you'd be in the office. So sorry.
Yeah.
Just because you decided to stay home or your employer asked you to stay home doesn't necessarily mean that you're not, it's not Massachusetts source income. That's the bottom line. It's what the definition of Massachusetts source income
exactly
is. And guess what?
Is it physical or is it check orientation?
The state of Massachusetts gets to decide what's Massachusetts source income within certain restrictions, right? So
I guess, yeah.
So it's going to be it's today's it's today's Talk Money tip. It's not great news.
Yeah.
But probably will keep you.
If you were thinking you might get out of Massachusetts taxes if you're in,
or you might be able to. There might be some way that you could deduct your expenses for working at home.
Yeah.
Yeah.
Don't count on it.
Don't count on it, and you're taking a risk if you try to.
Why flag yourself? Yeah.
Yeah. You might want to. You might want to be the test case. Maybe the governor will. No. Maybe the governor will
the
join.
Last thing you want is to be a test case. The last thing you want to be a tax test case.
Yeah. All right. So it looks like
especially with the Department of Revenue, as you noted.
Yeah. Hey, so it looks like we got some more. We have some more stuff like this. So we'll be back next week, same time. Thanks for tuning in. If you need to get in touch with me after the show, use the toll-free number, 877-475-2062. Send me an email. It's jeff@talkmoneyradio.com. Or you can just send us a message right through the Facebook page. We'd be glad to hear from you. You want to set up an initial consultation, we do that without any cost, no obligation. We'd be glad to talk to you about your personal situation. And hey, bring your last couple of years' tax returns. If you've got a couple of kids in college, and maybe you didn't get the full benefits, education benefits that you're entitled to, hey, bring the tax returns in. We'll take a look and see if maybe
you get a second shot.
Maybe you get a second shot. Mm-hmm. Yeah, exactly. So, again, we'll be back next week. In the meantime, please remember, good sound advice is way better than advice that just sounds good. Thanks, Lou.